Welcome to your new module. In this module, we're going to talk about candles, everything about candles, the open, the close. We're going to talk about, the exhaustion wicks and All right, welcome to the... So, in this module, we're going to talk about candlesticks. We're going to talk about candles with wicks, candles with no wicks, and what does that mean in terms of probability of your trade of working out. Everything about that we're going to talk about in this module. There's going to be another module about exhaustion wicks versus wick fills. I think that's also a very, very important concept, and that's something I think we should be able to do in another module. So let's start with candlesticks. So we're going to start with something very simple, something very basic. The first thing is we have a bearish candle right here, right now. We all know a bearish candle, it opens at the top and it closes here at the bottom, right? We have an open at the top and we have to go bearish, so it closes at the bottom. Now, these are wicks right over here. These wicks basically mean the highest point that the price reached within this candle and the lowest point the price reached within this candle. So let's say, for example, the candle started at about 1 p.m. and closed at 2 p.m. This was the time of this candle. We started at 1 p.m., we closed at 2 p.m. Now, for example, let's say we have a gold candle and the gold candle opened at, let me use the blue pen right here. Gold candle opened at 22.50. We went bearish and we closed at about 2200, right? So between 1 p.m. and 2 p.m., we started at 2250, right? During this time, we, let's say, created a high at 2270, right? We went up to 2270, let's say at 1:20 p.m., right? From there, we went all the way down and we even went into, let's say, 2180, at this point, but as soon as we came to 2 p.m., we closed at 2200. So that's what it is. If you're looking at a bearish candle, you see the bearish candle made a high. So this high was 2270, and then this low was 2180. Within this 1 hour, price moved at the highest point, and we moved at the lowest point, but what matters is where we close. So this is the body of the candle right over here. This is the body that you're looking at. Right over here, okay, right here. This is the lowest point and this is the highest point. So whenever you're looking at candles in terms of saying that, okay, I have one candle and now I want candles to make lower lows and lower highs, this is what it's going to be. So if we remove all this, right, so this is the low of the candle, the low, and if you want the next candle to make a lower low, you would want the next candle to break this low and to eventually make a lower low, because this is the low, not the body, right? This is just the body, and this is the lows and the highs of the candles. We got to take that into consideration a lot, because a lot of times we get confused. Now, also, if you're trying to create support resistances, you're creating these zones, right? Actually, this is going to be in a whole nother module, so we're going to go over that in that module, right? So now, you have a bearish candle, right? Bearish candle has a high and a low, and if we're looking to see that whether price will continue to move down or it's going to move up, we need to make sure that the body of a candle is a strong body. It's a nice, healthy body, right? So this is a nice, healthy body for bearish candle. Now, quickly moving on to the bullish candle. Bullish candles, obviously, we have a open at the bottom. We continue to move up, and we close at the top. Right? We open at the bottom, we close at the top. Now, let's say, for example, from 2 p.m., let me write this in blue. Let's say at 2 p.m. to 3 p.m., we started at the bottom. Let's say this was also gold. We started at about 2100. We continued to move up, and we closed at 2200. But between 2 p.m. and 3 p.m., the highest point we reached was, let's say, 2250, which is where we made a high, and during this time, during this 1 hour, we made a low at, for example, let's say 2080, right? So this is the low of this bullish candle. this is the high of this bullish candle. This is very important because sometimes, like, you know, what traders do, they'll say, no, you know what, this body is the low and this body is the high. No. The highs and the lows are the actual pinpoints of the candles right here, whether candles have wicks or whether candles have no wicks, which is something that we're going to talk about here in a second. But the most important thing when you're also looking at candles is to see what type of a body is forming with the candle, right? Is it a healthy body? Is it like a small body candle? Are the wicks big? Are the wicks small? So all these things are very, very important when you're trying to look at them. So let's say, for example, we had a candle. So now we're going to move into candles which have wicks at the bottom and which don't have wicks at the bottom. And then we're going to continue to move into, like, you know, different types of bodies of candle. What does volume represent when you're looking at the bodies and stuff like that. Okay, so let's say that we are trending, right? We have a bearish candle and we are trending. So when you're looking at candles with wicks to the bottom or like wicks at the top, there are two scenarios. The first scenario is, for example, we are trending down and you see a bearish candle and the bearish candle closes with no wick at the bottom. What does this mean? In the beginning, like, you know, when I started trading, I would look at this and I would say, okay, like, you know what, this means there's a lot of volume that's pushing price down, but, you know, the candle is closing with no wick at the bottom. You know, so this means there's no range. Whenever you're looking at price action, you're kind of like trying to identify whether if price is moving in my direction, what's the probability that the next candle will continue to move in that direction or not. So if this candle, let's say, had a wick right here at the bottom, there was a higher probability that price will continue to push in that direction. Higher probability. But when there's no wick here at the bottom, based on my own personal experience, I've seen is that, you know, there's a 50-50 probability that the next candle will continue to move in the same trend, which is down now. But most times what I've seen is, I've seen that, okay, let me remove this. I've seen that most times price would push down and then price would close something like this, like a bullish candle at this point. Most times I've seen this happen, you know, so every time when I see a candle going in my direction, but closes with no wick, let's say it's a bearish candle right over here, automatically I'm going to say, okay, like, you know what, there's a 50-50 probability that the next candle will print bearish as well. And, like, you know, as a trader, you don't want to execute on a 50-50 probability. There are ways to kind of, like, you know, look at different analysis and skew the probability in your favor, which we will go over some examples. But for the most part, in the beginning when I'm trading, I'm looking at this candle with no wick at the bottom and I'm telling myself, oh, hey, listen, Mr. Raja, this is a 50-50 probability, price is going to go in your favor. So it's better to wait to see how the next candle is going to close. And more often than not, you're going to see that the next candle will close in a way which you did not want if you would have taken the trade. Because obviously you're looking here to say that, okay, like, you know, if a candle closes with the wick at the bottom, then the next candle, should continue to push down. But instead, it doesn't happen, right? So whenever I see a bearish candle that has no wick at the bottom in a downtrend, I look at that and say, okay, like, you know what, there's a 50-50 probability, so I'm probably just going to wait. That's it. That's all what I do. You know, there's nothing more, no complication, just simple rule. Whenever something like this happens, I'm out. I don't wait for that. You know, same thing goes for a bullish candle. So let's say you got a bullish candle right over here and, you know, the trend is up, we're moving up and everything's looking good, but this candle closes the big fat bullish candle but with no wick at the top. When there's no wick in the top, this means that there's no range. I mean, if this candle had a wick, and this is something that we're also going to talk about later on in the module of wick fills, but when you see a candle with no wick at the top, this means there's no range for the next candle to move. Because whenever you have wicks on the candles, especially if it's a nice healthy candle with a nice healthy wick, I'm not going to go into, like, you know, what's the size ratio of the wick to the body. That's no, you know, but it's just like, you know, eyeballing the fact that this is a great candle with a great wick. So there's a higher probability that the next candle can continue to push up to fill this wick. Whatever size this wick is, there's a higher probability that's going to happen. But instead of that, what happens is that if the candle closes with no wick at the top, then there's a 50-50 probability that the next candle will continue to push up. Why would we want to execute on something that has a 50-50 probability? Makes no sense to me, right? So let's say if you're taking a buy right over here, right, and price forms and we wick up and then we continue pushing down to close like this. You know, when we start to close like this, then you're like, oh, you know what? Yeah, you know, it's pretty tough and it kind of closes with no wick at the top because it's a 50-50 probability, right? So what I've seen is that maybe after we close like this and you get another confirmation where a candle, you get another confirmation where the candle closed bullish, now you have a higher probability where the next candle can continue to push up. So you have to visualize these, like, you know, you have to visualize these situations that you want to happen, just like in regular life. Whenever you go into a negotiation with someone or whenever you go into some sort of a, like, you know, in a meeting, you visualize how the meeting's going to go. That's the same thing right over here. It's the same exact concept because you're visualizing the things that may happen in the future so you can execute. So again, for example, let's say that you saw a candle closing with no wick on the top, right over here. And you know, okay, when a candle has closed with no wick on the top, there's a 50-50 probability that the next candle will print in the same way. So what are you going to do? Okay, I'm going to let the candle do whatever it wants. Now, there are two scenarios that are going to happen. Actually, three scenarios that are going to happen. Scenario number one, very important. The first scenario is that the next candle closes bullish and continues to push up. In this scenario, there's a 50-50 chance, right? Either the next candle can move up or it can't move up. Just two outcomes, but different scenarios. If this happens, so that's totally fine. You follow your rules, you miss the trade. I've done this so many times as well because, you know, I don't want to execute on a 50-50 probability. If you're going to respect yourself as a trader, you want to execute on a probability that's more than 50%, that's more than 60 or 70%. In this case here, I wouldn't want to execute. I would rather miss the trade and then wait for a retracement or whatever, but I would just let it go, right? This is the first scenario of the 50 probability. Now, the second scenario is that the next candle, it moves up, but it closes bearish like this, right? Now you have a bearish close at this point. And the trend is bullish. Now, remember, this here, we're only talking about when the trend is bullish. So if we're trending bullish and you have a candle closing a bearish candle right there, from this point, two things can happen. Only two things can happen. Number one, what can happen is that the next candle can close bullish, irrespective of the size. Let's say this is a 30-minute time frame or a 1-hour time frame. Now, essentially, we've created a support, and there's a higher probability for the next candle to continue the trend to move up. Okay? Just grasp that idea. Now, the other thing that can happen is that the next candle can, you know, continue to push down. What's going on over here? Okay, there we go. There's my red one. So the next candle can continue to push down, and we basically start to range. That's it. So what am I going to do? I'm going to wait for this candle to close with no wick, obviously, and then I'm going to wait for the next candle to close. And if it's a bearish candle, then my hopes of trading the trend are a little higher. Because now from this point, I'm waiting for the next candle to form bullish. So we create support and we can continue the momentum up. But all in all, whenever you see a candle that's closing with no wick on the top in a trending market, this means there's a very low probability, or like, you know, it's a 50-50 probability that the next candle will go in its favor, or especially if you're looking at the bearish candle right over here. So there's a very, like, you know, a 50-50 probability that the next candle will also continue to move down. So always wait for the next candle. In the same way, we can do the same example right over here in the way that, okay, if the next candle, you know, wicks down and we close bullish, and if the next candle, you know, closes bearish, so now you have a higher probability for the next candle to continue to push down. So always create scenarios in your mind, always create how you want to see the candles form so you can execute. Me, I like the candles to form like this. Exactly. This is how I like. If the trend is down and if the next candle closes with no wick, that's totally fine. I'm going to wait. And I'm going to wait for the next candle. If the next candle closes bullish, perfect. Now I want the next one to close bearish. So there's a lot of variables. Next one closes bearish. That's my indication for price to move down. This may be in London session, New York session, whatever the case is. But at the end of it all, if we don't have a bullish close, if instead of a bullish close, price starts to just pump on down, then so be it. Like, you know, what can you do? So be it. You've missed a trade, that's totally fine, but you followed your rules because you know there's a 50-50 probability either price can move down or it can retrace or consolidate or whatever the case may be, right? But we're going to go over so there's a module where you can actually skew the momentum in your favor, well, skew the probability in your favor whenever you have a candle closing with no wick. So we're going to move into when price is trending and the wick is not present on the opposite side. So let's take a look at that. Okay, so now we have the opposite scenario, and that scenario is, let's say you have a bearish candle that has a wick at the bottom and the trend is bearish, blue pen, okay, and the trend is bearish and we have no wick on the top. So what does this mean? You have to read the candles and then you have to ask yourself, okay, what does this mean when the candle doesn't even have a wick on the top? This candle, it means there's a very high volume in this candle. It's a very high probability that the next candle will continue to push down because this candle didn't even move a tiny bit up to create that bullish top. It didn't. You know, there was so much volume pushing down that it didn't have enough time to even move up, to even make a high of the candle, because the high of the candle is the opening body of the candle. How powerful is that? That's very important. This is really powerful candle. Whenever I see a candle with no wick on the top, going bearish in a downtrend and leaves a nice juicy wick like this, I know for a fact that there's a very high probability that the next candle, it will continue to push down. Very, very high probability. If I'm not going to say 100%, maybe 80%, 70%. You know, 80% if I'm being really generous, but 70%. There's a probability price will continue to push down. And listen, it's the same exact thing when you have a bullish candle forming right over here. Now, this bullish candle, look at the size. Amazing size, irrespective of size. Even let's say, for example, this candle was like, you know, this size right here, and we have a wick on the top. This also means that this candle didn't even move down just a little bit even to create a bearish wick. Not even a low. The low part of this candle is the open of this body. This is the lowest part. It moved up and created a wick. This also means that there is a very high probability that the next candle can wick down and continue to push up, provided it doesn't break the low right over here, which we will talk about later. Right? So whenever you have candles in trending mode like this, going bearish with no wick on the top, this means there's a very high probability that the next candle can continue to push down. This is very important. You know, whenever you're looking at like the presentation of these wicks, whenever you're looking at these wicks are very, very important. Very important, because look, if the wick is down over here and there's no wick on the top, there's a 50-50 probability that the next candle will move up or down. You know, but if on the other hand, you have a wick on the top and there's no wick at the bottom, on the vice versa right over here, this means there's a very high probability because this candle didn't even create a lower wick, didn't even move down just a little bit to say that, okay, we can probably move down. No, it went straight up. It went straight up. On the other hand, let's say if we have candles with no wicks, we have full block bodies like this, same thing. Same thing. I'm waiting for the next candle to close. I'm waiting to see what the next candle is going to do. That's all what I'm doing. 50-50 probability, because there's no wick at the bottom, there's no wick on the top, like we don't know what's going on. because I need a candle with a wick. Because it's the same thing as when you go to a third world country and you ask for directions, there are a lot of people are going to give you some crazy, wild directions. Some people are going to say, oh, like, you know, go left and go right and go straight. Someone's going to say, oh, go straight and go right and just keep going. You know, what are you gonna, who are you gonna listen to? You're gonna listen to someone who you think has more experience in that, like in a specific location or whatever. So the same thing is right over here. You want a candle that has wicks, because whenever I see a candle that has wicks, this tells me that this candle is telling me some sort of a direction, right? Some sort of a direction is present right over here. Because if this is a 4-hour candle, there's proper market structure on the 15-minute, the 5-minute, the 30-minute, and the 1 hour. So these things are very, very important. So whenever you're looking at candles that have no wicks versus wicks based on, like, you know, what the direction is, it's really important to decide whether you're gonna wait for the next candle to close or whether you're gonna, you know, execute based on certain confirmations and stuff like that. So this is very important. Implement this as you're doing your analysis, you're looking at the charts, and man, trust me, a lot of things are going to change for you. Of course, waiting for the candle to close is very annoying, especially if you're looking at a 30-minute time frame and your friends are taking the trades. But man, trust me, it's better safe than sorry. You may as well miss a trade one day where you weren't that confident than to be in a trade and be afraid that you may lose the trade. That's extra stress which no one wants. So hopefully this helps. We're going to see you in the next module.